an asset account, and we know that a debtors control asset account, we are going to have our balance on the debit side, right? We're going to have our balance on the debit side. So what was the balance at the beginning of the year? So they told you it's 5,600, right? So you're going to say what? You're going to say balance brought down on the 1st of March 2010, if I'm not mistaken, and then your amount is 5,600, right? So we know that we had to actually decrease this account by our bad debt, okay? We actually had to take 600 out of this this debtors control account. So therefore, since we are going to decrease this account, you are going to actually debit that to say we are going to decrease this 5,600 by 600, and we are going to decrease it and take it to which account? To the bad debt account, right? So at the end of the year, because this is a year-end adjustment, right? Okay, so it is journal, and then it is 600, right? And then after that, you'll have to do what? You will have to balance your account, right? To say for next year, okay, yes, my total will be what will be 5,600, but my closing balance of this account will actually be what? Will be 5,000. So meaning this is what I'll be having next day. Balance carried down as 5,000. Okay, so you'll take it to the other side and say this is what I will be having next day. Balance brought down next day of 5,000 in this account, because I had to decrease this account by actually 600, right? So on the 1st of March 2011, right? And then your provision for bad debts, we know that this is a negative asset. If this is a negative asset, it means it's going to have a balance on this side because it is a negative asset, right? So since we do not actually have a balance of last year, we had to create this account from fresh, right? So we'll just record our provision for bad debts in this account, right? So since we had two accounts that were affected, provision for bad debts adjustment and provision for bad debts, our details will be provision for bad debts adjustment, which was at the end of the year, right? So it is provision for bad debt adjustment. Okay, so it is journal. So what was our provision for bad debt adjustment? It was 250. So you take it to this account, right? And you go to your nominal account section, and you also have to take it to your provision for bad debt adjustment, right? Okay, so let's first record the bad debt that we incurred, right? So since this is a negative asset, right? It is a negative asset. It means that you need to first record the total. Remember that this is not a balance sheet account. It is a nominal section account. We don't have balance, or rather amounts of last year. We don't have totals of last year, but we have amounts of this year, okay? This total is actually amount that we've been having maybe throughout the year, okay? Probably we had to write a data off during the year, right? And then we are just adding to this total. It's not a last year's balance, right? So it's actually how much? It's 800. Let me just check. Yes, it is 800. It is 800. So therefore you say your total at the end of the year, February 2011, it's actually 800. And then you remember that I was actually told to also write off 600 to this account, okay? And since this is an expense, and we know that an expense is debited, you'll do that, you put that on the debit side, okay, as your debtors control. Okay, so it is actually carried forward, and then it is journal of 600, right? And then you add them together. To get 1,400. Remember, all of the expenses needs to be taken to profit and loss, and that's what we did with depreciation. We took it to profit and loss. So at the end of the year, always, and then Feb 2011, you write your details there as profit and loss. Remember, in our profit and loss account, we are trying to get our profit. So hence we are taking into profit and loss account. So as 1,400, 1,400. And then the last account, remember I told you that you have your provision for bad debt adjustment and your provision for bad debt, right? And this is going to be an expense because we created that provision for bad debts for the first time. We had to take an amount out of our pockets, I would say, or out of the bank, and take it to this account, provision for bad debts, right? And we know that since we created it, it is a debit, right? So it'll be a debit because it decreases the profits, right? So two accounts were affected. It was provision for bad debts, right? So that will be our detail, that asset account, provision for bad debt. And when did we do this? We did this at the end of the year, February 2011. And then your folio will be journal, and the amount there, it was 250. And then because this is an expense account, or rather a nominal account, we always take our incomes and expenses to the profit and loss so that we can calculate our profit and loss. That's what you'll do. You'll close this account, or just write the total there, 250. Write the total there, 250, and say, I'm taking this to my profit or loss, because I know that we do not bring down balances, right, of nominal accounts, right? We call them temporary accounts. So it's 2011, and then my details will be profit and loss, and then it will be journal, yes, and then it will be 250, right? You are not done. You do your note number 5. Remember, your trade and other receivables, right? For your trade and other receivables, this is where you show that my provision for bad debts, it is a negative asset that is actually decreasing our trade debtors. So the first one will be trade debtors, and it needs to be adjusted to say, okay, at the beginning of the year we had 5,600, and we were told to write off how much? To write off 600 again to bad debts, right? And therefore we have 5,000 worth of debt. Okay, and then the second one that decreases our trade debtors is what we call our provision for bad debt. And remember that I've told you so far that your provision for bad debt, it is a negative asset, right? So it is a negative asset because it decreases this asset of ours, trade debtors, right? So how much was it? We calculated it as 250. Okay, that's going to decrease our trade debtors, right? And then when we do this, we decrease our trade debtors, we will get how much? 4750 as our net trade debtors. Okay, so another thing which I would like to emphasize is that, okay, bad debt, remember, it is an expense, right? We are going to record this 1,500 in our income statement. As well as this, it is an expense, right? Because we had to create this account. So we are also going to record this under expenses in our income statement, right? And then for your provision for bad debt, right? Your debtors control and your provision for bad debt will affect the balance sheet via this note number 5, right? This note number 5, but you'll see how we do that. But just remember, as you are going to start with the income statement, okay? Sharp.